The secondary market does not know where the economy is going to go right now. Is this the new normal, that gas prices are $4 a gallon and that groceries are super expensive and everything's super expensive? And we all know inflation, lumber, metal, you guys all know that stuff's elevated, right? If gas prices are going to be $7 a gallon because they're just pumping endless dollar figures and inflation is going to go through the roof, mortgage rates have to be at 5, 6, 7, 20%. It's a must. But if this is like short-term stuff, then mortgage rates will settle back down to 2 to 3%. So the problem is the secondary market right now doesn't want to give you the ability to go sell a 4.5 mortgage rate and pay you your full rip on it, because they're sitting there saying, if we let these guys go sell 4.5 to the whole world right now and mortgage rates go back down, what's going to happen to those 4.5 rates that we gave out? They're going to refinance. But understand that. So when you guys see this pricing and you're wondering, why am I losing it? That's why you're losing it.